Welcome to Breaking News to Trading Moves. Today we're looking at a really interesting development coming out of the urban mobility space.
Yeah, it involves some big names and points towards how autonomous driving tech is moving forward.
Exactly. The main headline is a new partnership between Lyft and Waymo. They're aiming to bring robotaxis to Nashville, Tennessee, starting in 2026.
And this isn't just, another taxi service. It touches on ride-hailing dynamics, how fleets might be managed in the future, and even EV infrastructure.
So it's got layers. It seems like a pretty strategic collaboration for both Lyft and Waymo, and maybe for the wider AV market too.
Absolutely. It signals how this autonomous tech is, well, really starting to be deployed more widely and how companies are figuring out the business side of it, monetization.
Right. So let's get into the details. Lyft and Waymo, Nashville, 2026. What does this launch actually look like?
Well, it's a plan to establish a robotaxi service there. It represents a clear step in taking these autonomous vehicle services beyond the initial test cities into new markets.
Nashville's an interesting choice. It suggests they're feeling pretty confident about scaling this.
It does. It shows they believe the technology and the operational model are ready for broader application.
Okay, let's look at Lyft first. That's ticker LOYFT. This seems like a fairly important move for them, strategically speaking.
Very much so. People are talking about it as a potential second growth lane for Lyft, moving beyond just connecting human drivers with riders.
So how does that work? What's Lyft actually doing in this partnership?
They're taking on some specific operational roles. They'll be handling the fleet management side of things using their Flexdrive platform.
Okay, so managing the vehicles.
Right. And maybe even more significantly, they're planning to develop a purpose-built facility there in Nashville dedicated to these autonomous vehicles.
A dedicated facility? For what?
For charging them, servicing them, keeping the fleet operational. It's quite a commitment.
That does sound like more than just providing the app. So the idea is this creates a different kind of revenue for Lyft.
Exactly. Potentially high-margin revenue from the platform itself and these services, fleet management, the facility operations. It's income that isn't directly tied to paying a driver for every single trip.
Interesting. So Lyft manages the operations on the ground. Waymo provides the cars and the self-driving tech.
Broadly, yes. Waymo, which is part of Alphabet, ticker GOOGL, gets something major out of this too.
Right. What's the angle for Waymo here?
Distribution, primarily. This deal gives Waymo direct access to Lyft's pretty large base of existing riders.
Ah, so potentially more passengers for Waymo's vehicles.
Yes, which leads to better vehicle utilization, keeping the cars busy, earning revenue, and just generally helps them monetize their technology more effectively. It's about scale.
And Waymo is already working with Uber in some other cities, right? Like Austin, Atlanta?
They are. This partnership with Lyft sort of builds on that. It points to a strategy where Waymo wants to be available on multiple ride-hailing platforms, not just one.
Does that make sense? Being on both Lyft and Uber.
I think it does, for Waymo at least. It maximizes their reach. Think about it. Different people prefer different apps. By being on both, Waymo gets its service in front of more potential customers.
Okay, so it's about being ubiquitous, essentially.
Sort of, yeah. It helps them scale faster, gather more data, and really establish themselves in the market, regardless of which app the user opens.
Makes sense. Now, you mentioned infrastructure earlier. All these robotaxis will be electric, presumably, like Waymo's Jaguar I-Paces.
That seems very likely based on their current fleet, and yes, that means a significant need for charging infrastructure.
So who benefits there?
Well, companies involved in EV charging solutions are definitely ones to watch. Think about ChargePoint, ticker CHPT.
How so?
That dedicated AV facility Lyft is building. It's going to need a lot of depot charging, specifically DC fast charging to keep those robotaxis topped up and ready to go.
Right. These cars need to be available as much as possible.
Exactly. So AV's ChargePoint could potentially supply the hardware, the software to manage the charging, maybe even ongoing service contracts. It's a new source of demand.
Okay. Any others in the charging space?
EVgo, ticker EVgo, could see a similar upside from these kinds of depot buildouts. Plus, as these AV fleets expand to more cities, there might be opportunities for roaming agreements between charging networks.
Roaming?
Yeah.
Like for cell phones?
Kind of, yeah. Allowing a Waymo vehicle, for instance, to use an EVgo charger if needed when it's outside its main operating zone or away from its dedicated depot. More flexibility.
Interesting. What about the car companies themselves? If Waymo uses the Jaguar I-Pace, like they do in Austin?
Then yeah, that's good news for Jaguar Land Rover, which is owned by Tata Motors, ticker TTM.
Wow.
Just increased visibility for their electric vehicles and potentially higher sales volumes if Waymo keeps ordering the I-Pace for these new city deployments. It's a steady, visible customer.
Okay, so we've talked about the partners and some potential beneficiaries, but partnerships like this always shake things up competitively.
They certainly do. The autonomous vehicle space is incredibly dynamic. Moves like this can definitely shift the competitive pressures.
We saw Uber's stock, ticker Uber, or dip a bit when this news came out. What's the connection there?
Well, Lyft securing a major AV partner like Waymo, especially for a 2026 launch, kind of challenges Uber's narrative.
What narrative is that?
Uber has positioned itself as wanting to be the main platform, the aggregator, for all autonomous vehicle services. So even though Uber already works with Waymo elsewhere,
Like Austin and Atlanta, you mentioned?
right, Lyft getting this exclusive Nashville deal with Waymo creates a strong competitor on a rival platform. It raises questions about who ultimately wins the most market share as AVs scale up.
So it complicates Uber's plan to be the one-stop shop for AV rides.
It does seem to, yeah. It ensures Waymo's presence isn't solely tied to Uber's app in the future.
What about other players? General Motors, ticker to OGM, has its Cruise division. They've had some setbacks but are working on a comeback.
Yeah, GM is focused on getting Cruise back on track and rebuilding momentum. Waymo expanding its reach like this, now partnering with Lyft, definitely increases the competitive heat, just as Cruise is trying to restart its own initiatives.
So Cruise faces a more widespread competitor now.
Effectively, yes. Waymo's multi-platform presence makes it a more entrenched player for Cruise to contend with as it re-enters markets.
And then there's Tesla, ticker TSLA. They talk a lot about their own robotaxi plans.
They do. And this Waymo-Lyft deal creates a pretty concrete multi-app competitor, especially in cities where both might operate, like potentially Austin down the line.
How does it challenge Tesla?
Well, Waymo is succeeding with these geo-fenced, fully driverless operations operating within defined zones and getting city approvals. That's a different approach than Tesla's broader, full self-driving ambition. This partnership gives Waymo another channel to scale that approved, geo-fenced model.
So Waymo might be getting a foothold in cities faster with this focused approach.
It's certainly one interpretation. They're building operational experience and presence city by city, now across multiple ride-hailing apps.
Let's zoom out even further. Are there impacts on industries that seem less directly connected? Like, say, insurance?
That's a really interesting long-term question. Think about personal auto insurers. Companies like Progressive, ticker PGR, or Allstate, ticker All Dollars.
What's the connection to robotaxis?
Safety data. Waymo consistently reports significantly fewer injury-causing collisions in the miles driven by its autonomous vehicles compared to human drivers in the same areas.
Okay, so the argument is robotaxis could be safer.
That's the data Waymo presents.
Mhm.
And if it's still an if on a massive scale, but if robotaxis do prove to be substantially safer over time and across many cities,
What happens to insurance?
well, the whole model is based on assessing risk and pricing premiums based on expected accident frequency and severity. If accidents, particularly injury accidents, decrease dramatically in areas with lots of robotaxi,
Then claims would go down.
potentially yes, which could, over the long term, put pressure on premium levels and force insurers to completely rethink their risk models for personal auto insurance in those regions.
Fascinating. So a shift towards autonomous driving could really alter the fundamentals of the car insurance business down the road.
It's definitely a long-term trend that insurers are watching very closely. Fewer crashes means fewer claims, which changes the financial equation.
So wrapping this up, this Lyft Waymo deal in Nashville isn't just about a new taxi option. It touches ride-hailing competition, EV charging needs, automaker sales, and potentially even insurance models.
It really does. It underscores how quickly autonomous vehicle adoption is moving and how interconnected these different sectors are becoming. We're seeing the early stages of a pretty significant evolution in urban transport.
It definitely gives us a lot to think about. As these autonomous services do become more common, what other industries, maybe ones we haven't even touched on today, might find themselves changed in unexpected ways by the quiet arrival of robotaxis in our cities? That brings us to the end of this deep dive from breaking news to trading moves. Just a reminder, everything discussed here represents the opinions of the author and is for informational purposes only. It should not be taken as financial advice or a recommendation to buy or sell any securities. Thanks for joining us.